Thank you for joining us for the Markets and Valuation panel this morning on education. I'm Maria Karahalis, and I'm the research analyst that covers education at Goldman Sachs. Because I am the research analyst at Goldman Sachs, I have to read a disclosure statement about what might be discussed today, so bear with me for one moment as I read it. I even have to take off my glasses. We are required to make certain disclosures and public appearances about Goldman Sachs' relationships with companies that we may discuss. The disclosures relate to investment banking relationships, compensation received, or 1% or more ownership. I'm prepared to read the disclosures. There's more. If for any issuer now or at the end of this call, this discussion, if anyone would like me to. However, the disclosures are available in our most recent reports, available to you as clients on our firm portal. In addition, updates to these disclosures are available by ticker on the firm's public website at gs.com/research/hedge. Views of non-Goldman Sachs personnel may not represent the company views. And with that, let's go into the panel. I'm very pleased today to have on the panel Chris Hohnsark, co-founder and general partner of Sterling Capital Partners. Rob Lytle, head of the Education Center for Excellence, for-profit and international at the Parthenon Group. Tao Sun, partner of Actis and investment manager for Ambo and director of the board. And Gene Sykes, co-head of Global Mergers and Acquisitions at Goldman Sachs and chairman of Global Technology, Media, and Telecommunications Investment Banking. As with many of the other panels, I thought it would be a good idea to open this panel as well and ask each of you if you can please talk about what brought you here today, briefly, just to give the audience a sense for where your interest in education lies. Chris?
Sure. Well, what brought me was Carla said, you've got to come out. This is like the most important event. But I think we've been involved both as operators and investors in education for over 20 years. And it's been really an exciting period to watch, but not always an upward trajectory. And what's most fascinating has been the way things have moved sort of from a US-centric view to a worldwide view. Mm-hmm. And so I kind of think of us as moving in the second chapter of what is really a generational asset class. And so the chance to come out and participate in this was great. So we're excited about that, and we think this is a category that literally, I hope my grandkids participate in. It's so important for the growth of the world in general.
Fantastic. Rob?
Yeah, listen, I thought about this a bit, and I think I'll give it three main reasons that keep me excited about education. First, this will sound a little bit corny, but somewhere right now in Brazil are young men and young women going to university who couldn't have gone to university 15, 25 years ago because enough universities didn't exist. This is the same here in the United States. There's working adults all around us as we speak right now, probably working online and studying to advance their career and get a better shot at life. Again, not an opportunity 15, 20 years ago. So there's enormous social good in this. On the flip side, there's enormous economic opportunity. We at Parthenon fundamentally believe that this may be one of the largest, longest growth, secular growth type of industries there is in anywhere on the world. And so the opportunity to create value here is phenomenal. And third, kind of back to the corny side, I would have to say that just about every CEO or executive that we've had the opportunity to work with in this space is what I would classify as a true believer. Someone who fundamentally believes that actually advancing education in the world is good for society. They just happen to be making money while doing it. So, those three things kind of come together to keep life interesting for us.
For me, two reasons brought me here. Personal reason, education has always been emphasized in Chinese culture, and Chinese parents tend to believe good education leads to better social status and financial return. Education does change people's life in China. Myself is a good example. I was born in a small village in one of the poorest provinces in China. But I was lucky to be admitted as one of the 6 students out of 50,000 in my year, in my province, into Beijing University. And I barely spoke English before college. So myself is a good example of education, how education changed people's life. And the second reason, I have been leading Actis education investment across all regions. And we have been very committed in education globally, particularly in China. We have invested about 300 million US in education, in China education market, with 2/3 in higher education. So I'm very keen and very happy to be here to exchange views and learn from you guys.
Great. I feel a bit like the midwife of this conference because at the end of last year, it was sort of in November, Carlos and Victor came to me along with Ulrich and they said, do you think Stanford would be willing to do a conference with Goldman Sachs? And I have been the chair of the advisory council here at the business school at Stanford up until the end of last year for 3 years. So I knew the business school and the university quite well. And so with that, I said, well, let's see. It can't really be our conference. If you want to do it with Stanford, it's got to be our collective conference. And so I called Garth Solona, the dean at the business school, and explained what we thought we might be able to do together. And he had immediate enthusiasm for it. But like a good business person and academic dean, he said, it's a great idea, but we have to get some other people at Stanford to host it and think about it. And he directed us toward the School of Education. And so it's actually been both a great exercise in how Stanford collaborates within the various components of Stanford, the School of Education, the GSB, the Hoover Institution, and of course CEPR, all of whom have been involved in planning and working in this conference along with Goldman Sachs. And so it's nice to have had that, as I say, midwifing experience here. And then from an education standpoint, I must say, I think I probably spend 30 or 40% of my time in education, and it has nothing to do with my business. Since having been chair of the GSB Advisory Council involved some time, and then I've been chair of my own children's elementary school board for the past 3 years and went through the process of searching for a new head. And I would imagine that many of the people in the audience have had the same sort of experience. Taking responsibility for independent schools is a very significant job, but one which a lot of professionals do all the time. And so I think all of us are learning something about how education is carried on in our real lives in ways that are very personal to us. So it was easy to be enthusiastic to come here and participate in that.
Thank you for coming. My interest in education has come from the opportunity to look at the education sector at Goldman Sachs, most recently in the higher education space. But in many ways, like Jean, have invested a lot of time, maybe more personal time, in focusing on the education of my 3 very young children who are aged 7, 5, and 2. And thinking about where education will go today, which was a lot of the commentary on K through 12 education yesterday, which frankly I found fascinating, in thinking about my own education and what theirs will be one day. On this panel, I'd like to explore a couple of topics, including where are the interesting investment opportunities in the space, how do you as investors think about valuing them, and what we have to look forward to on the broader regulatory front as it relates to this business. In terms of where the interesting investment opportunities may be, when we talk about the education market, it's really a very fragmented market after all, right? As we heard yesterday, you can talk about K through 12, you can talk about higher education, you can talk about technology. There's no single defining education market at the end of the day. Chris, I'd like to hear from your perspective, where do you think the most interesting opportunities in education lie? Is it in one of those segments or maybe in something that I didn't even mention?
Well, I think there are opportunities in pretty much all of the segments there. I think that underlying this whole issue are why should there be change, and therefore why is there an opportunity for people like us to participate in this? Mm-hmm. If everything was going great, frankly, people like us wouldn't have a role in the marketplace. But I think that we know that right now economies around the world are really seeing, as they shift from manufacturing to knowledge-based economies, a need to skill up the population in general. Mm-hmm. And there's a clear correlation between educational outcomes and economic achievement. And I know it's been discussed here before and so on, but it's always been striking to me just the generational shift, and frankly the debate we're having in this country today about issues of wealth divisions in the country and why some people are achieving things and why others aren't. And it reminds me back that 30 years ago, if you had a high school diploma, you earned just above the average salary in the United States. Mm-hmm. And at the same time, there was only about a 25% differential between a high school and college degree. And today, that has completely bifurcated. And when we have a population today with a third of the population approximately not getting a high school diploma and a third approximately getting a college degree and everybody else in the middle, mm-hmm. you really have the makings for problems. And we also know that our K-12 system is misaligned with higher ed, where we're graduating people with a high school diploma that does not equate to college readiness. So in each of those things, what we try to do is to look against that backdrop and find the place where we can solve a particular issue. So job readiness and skilling people in the post-secondary market, that's an area that we've seen a lot of volatility because of a growth in capacity, but not necessarily in outcomes. So when we look there, can you build universities that have great outcomes for the students? I think, oddly enough, you would think that would be the watchword of this entire industry, and yet it hasn't been. We think there's great opportunity to continue to do that. We think there's an opportunity today in actually gapping people between high school and college. When you have 40+% of the population seeking to go to post-secondary education, frankly being unqualified, you have a big problem. And we think that is one of the big frontiers now, because you really have structural pressures coming into the market, which are forcing universities of all ilk to say, do we have students, are we doing a good job for our students? Are graduating students, do they get a job, for-profit, non-profit, so on. And they're going to be forced to revise their programs or take fewer people. And in the end, you can't take fewer people. That means you need to gap that. So, and finally, I would say overseas, there obviously are great thematic opportunities in both K-12 and post-secondary. So those are some of the areas that we're focused on.
And you, Rob?
Yeah, first of all, I would agree with everything Chris just said there. You know, as you look across the education landscape, and people always ask me, you know, where are the great investment opportunities? And I say, there, right? It's actually everywhere. Even in a sector that is apparently super challenged, and I'll take K-12 Basel textbook publishing in the United States, right? It's getting hit hard. And yet there's still enormously cash-generating machines. There's opportunities to take them to digital courseware, the remediation market. So even in a sector that challenged, there's opportunities. But if we had to boil it down and say, really, where are the opportunities? If you really want to find high-margin, high-growth businesses, we look for two fundamental things worldwide. First is the closer you get to the point of delivery of education, the faster you grow and the higher your margins are. And so by that, you know, we call it, it's like reaching out and touching the sun. It's really warm unless you touch the sun, and you touch the sun when you have a bad institution. If you don't have outcomes, if you don't get students good jobs, if you don't advance their life, your business craters really quickly. Either your students will crater it or regulators will crater it on you. So you got to be careful. The second thing is we just look around the world and we have a fundamental belief that anywhere income is rising, demand for more and better education is rising as well. It's correlated, it's causal, right? Higher income demands better education for their sons and daughters. Higher education drives the economy. So get on board with those opportunities. And what happens is in the post-secondary landscape, regulators have to liberalize, right? So Brazil liberalizes, and now, you know, the vast number of students in Brazil go to a private sector institution, quality ones, I might add. China liberalizes, and all of a sudden it takes off. India is got to liberalize at some point because the population will demand it. It's a democracy, it's messy, but democracies work in the long run. So if you're all in on democracy, you should be in India. In K-12 education, you see people wanting more and trading up. So right now you go into Vietnam and a place like that, and the demand for quality international K-12 schools and bilingual education is absolutely phenomenal. If you meet that demand, you're going to have a great business. If you offer bad product, though, you're going to be in trouble.
Yeah, I agree. Opportunities exist in every subsegment in China education. I think one thing we need to understand is this whole value chain in China is actually driven by one simple test, which is a college entrance exam every year. There have been about 10 million high school graduates every year taking this college entrance exam. We call Gaokao in Chinese. I think the admission rate in terms of how many people can really get admitted passing that exam was about 20 to 30% about 20 years ago. Now it's getting to 60 to 70% nowadays. But we are still talking about millions students who could not get into the college because of the lack of capacity. So this is a very competitive process. So the competition really starts from a kindergarten, because better kindergarten leads to better primary school, then better junior high, then better high school, then better college. So that's why you see the booming of after-school tutoring, just Dr. Huang of Ambo yesterday explained, because that really help you to improve your opportunity, your chance to get into better high school, then better college. So there are opportunities along the line. Recently, I think in the past 10 years, overseas education has become really a phenomenon in China. I think number of students going overseas has been grown double digit for 10 years, and will continue to grow in that growth rate. So we've made investment in overseas education, we made investment in after-school tutoring, but I think one particular space we really like is the higher ed. Maybe we can talk about more in details why we like it.
That would be great.
I have a couple of observations. One is, it strikes me this is the one sector where there's an enormous crossover between the not-for-profit sector and the for-profit sector. And much of the innovation actually is taking place and being catalyzed by the experience of the not-for-profit sector. But then it can't be scaled without the for-profit motivation and resources applied to the challenge. And in part that comes from the fact that the not-for-profit sector has an orientation of solving the biggest problem in the most acute way and with the most acutely needing audience. So you think about the underserved populations in this country who require much more direct impact, and the lessons that come from that are fairly quick. And the lessons then yield opportunities that frankly only can be realized on a bigger scale with the kind of influence and resources associated with the for-profit world. And we see that all the time. It's a very, very interesting thing, and it's obviously one of the notions behind this conference in the first place. Now, the other thing I'd say is that in order for this sector to really become what it will be, I think a number of the major media and technology players, big companies, you know, the names Apple, Google, Disney, et cetera, who you think of as having interest but not having experience in this sector, will have to be very, very big players. And they're all sort of observing and trying to see where do they have either relevant skills or relevant experience, and more often than not, they stumble across things because none of them, I think, have really very thoughtful strategies about what to do here. So the for-profit sector in this fragmented area needs to bring all of the opportunities in some ways to the attention of this established corporate group. I'll tell you a story that Bob Iger shared with me when I talked to him about education, you know, in the past month. He said, you know, the only thing that we at Disney have done in education turns out to be in China. And it turns out to be something that he didn't even know about, but somebody had the idea of doing English language schools in China with the Disney brand. And the Chinese thought, well, Disney has to be English language. They associate the brand with the English language. And in fact, it had inherent credibility with the population of people who wanted to educate kids with English language skills. And so they have set up 25 English language clinics that have been incredibly successful in China. This is all within about 2 years. And it's both a profitable business, it has huge growth dynamics, and here they have discovered something their brand means in education in a global market, which was not at all obvious to them until it sort of happened. And that's why I say I think there's a tremendous amount of opportunity if the big established players actually take advantage of what's being seeded in this sort of evolving sector.
Chris and Rob, you both sort of touched on, perhaps I'll call it the value proposition of education. And I know it's something that you think about a lot, particularly outcomes. Talk a little bit about when you look at a business, what would you define as a successful value proposition, and what are the kinds of outcomes you look for? What are the benchmarks? How do you value that? How does that factor into either your decision to invest or the value you place on that business?
So I think in our business, where we're not stock traders, we're in the business of trying to create businesses that have a long, sustainable life to them. And as such, we really have to think long term about, are we creating something that has profound value to the customers that you have, and it can work within a particular institutional framework. And against that, I think what you can't measure, you really can't value properly. And to us, when we look at outcomes, they are, in the simplest of terms, the value proposition between how much it costs versus the value you're getting on the other side, whether it's in job outcomes, job placements, or so on, or opportunity if it happens to be in K-12, as in if I'm running a K-12 school, am I getting into the best universities as an example, or some other measurement. So unless one has, I think, a really clear picture of that value equation, you can make money in this business because the trend is your friend in certain areas. But ultimately, we would stay away from things that we can't actually find good, sustainable propositions that you can be proud of what you're doing and clear outcomes. So I will tell you, for instance, Disney, just as an aside, has been in education for a long time. And they actually operated English language programs in Japan door to door for years. They also had what they thought was education, which was baby Einstein. And I think they are, in fact, both an opportunity and a cautionary tale in this marketplace. So when I look at something like baby Einstein, you can make a lot of money sort of with an educational claim. But ultimately, do you create something that's sustainable, good, and valuable? And so I do believe that has to be the anchor for everything you're doing in this marketplace, is a measurement, clarity of purpose, a unifying principle around your business, a value proposition to your students. Then you can create, and there are lots of opportunities that do that.
And tell me, how does that value proposition then factor in to your thinking from this point of view? Is it, I want to invest behind a quality business because then I can take it and scale it? Or is it, I look at this business, it's a high quality business, it has the value proposition, it affects how I can price my product, the profitability that I might be able to derive from the business. Talk a little bit through your, and Rob, you as well, a little bit about how that influences your thinking on how you evaluate the particular business.
Well, and I'll let Rob speak in a second. I think for us, what it really is that the idea that that businesses work in all seasons and that you're going to ultimately be able to get fair value at any time in its life cycle. Obviously there's volatility, but I think the idea that if you can be top of the market in terms of quality in whatever your measurement systems are, outcomes that are clear and crisp and understandable, a great economic value proposition for the consumer. The great part about this market is that many, many parts of the system do not function that way. So if that's the case, then you can differentiate yourself, you can generate higher margins, you can generate pricing power, you generate the entire sustainability model of referenceable clients. All of those things come. And it sounds sort of like mom and apple pie. On the other hand, what I can tell you is this market it is, as a general rule, not governed by those factors. And so if you can actually do that, you can really create great outcomes economically. So I'm sorry.
No, I mean, so we work with investors all over the world in evaluating education investment opportunities, and we talk, this is more along institutions, so those that deliver education. They're often highly regulated, so if you're in a regulated environment, you better be super clean, right? And we don't mean like absolute clean, right? Like I'm above all the regulatory issues, but relatively clean. I'm actually a lot better, demonstrably better than my peer institutions. You don't want to mess around with an institution that's not good on its regulatory side. Just not a good idea. Second is do I have demonstrable value in actually educating the students in whatever it is I'm doing, right? So first, do they graduate if it's a post-secondary institution? But more importantly, do they actually evidence the cognitive gains and the non-cognitive gains that my curriculum is supposed to do? Right? And then third is, in many cases, do I get them good jobs at the back end, or employers satisfied if I'm in a post-secondary, or university satisfied with my graduates if I'm in a K-12, or employers and corporations satisfied if I'm in an ELT program. If those three things don't hold true, you probably shouldn't make the investment. Now, an ideal investment to find is something that's regulatory clean, great outcomes, super happy recipients of the graduates with low margins and no growth, because those are the things you can fix. You can work with an institution to get it better marketing and help it grow, to get its programs more aligned with the market and more attractive. But increasing graduation rates, improving outcomes, if the ethos of the institution is broken, that's really, really hard to fix.
Tao, China holds obviously very similar concepts when you think about the value proposition. Right. You talked about it in your opening remarks. How do you think about the value proposition for the students. And I know maybe this is a good time also to segue into your comments about higher education, because I think many people perceive the Chinese market as very regulated, very difficult to enter, and stay away from the secondary education market or the post-secondary education market. And I know you have some interesting ideas about the opportunity actually to invest, to see consolidation, and to work with those schools. Can you talk a little bit about that?
I think China market is unique in a way that it really hasn't been a market probably since 2010, because it hasn't really opened to not only foreign investors but also private investors. So it's in a very early stage. Management team there are young without much experience, and the regulation sometimes is not very clear, quite a few gray areas. So I think this actually requires, but it doesn't mean it is not attractive or you should just avoid it. In fact, I think there are a lot of opportunities, but that requires a lot of local insights. You need to have a very strong local team to execute. And sometimes you have to customize your investment approach in this market. To give you an example in higher education, when we look at the sector, when we started the space, we spent about a year try to identify, what would be the best approach for us to invest. We know it's very attractive, but basically we couldn't find any good management team, any good platform we can back. So we sort of concluded a very bold decision, which probably can do by ourselves, employing a buy and build strategy. So we decided to recruit the CEO, recruit the management team. We created the company. We founded the company. We are the sole investor of the company in 2009. That is not something most private equity firms will do in China. But I think 18 months passed. We have acquired 5 colleges. We have 50,000 students. By the end of this year, probably we'll have 70,000 students. We will be the largest player in this market. So you really have to understand the market and customize your approach.
Makes sense. Let me segue just a little bit to regulation. When you think about the education sector, are there certain key regulatory considerations that you single out that might influence your views? I mean, a recent one on the higher education side, with gainful employment now at least finalized, perhaps better than expected broadly by the market. How has this influenced your view about the post-secondary business in terms of the cash flow that it can generate, the growth that it can sustain, and maybe what the business model needs to look like, maybe the before and after point of view?
Well, I'm not sure we figured out what the after is yet in the market. But I think that, quite frankly, I think gainful employment was a necessary rubric. I don't think it should have been targeted, by the way, at just the for-profits. But I think the rubric of saying that there should be standards around the consideration of how government lending is not a bad thing. Mm-hmm. And one of the things, because we always started with the philosophy of looking at higher quality institutions, that was something that we simply, frankly, wanted the rules to be released because we knew that the institutions we were involved in would fare very well under anything which was outcomes driven on things. So I think that today you have a bifurcation in the marketplace between those that have business models that work in that regular environment and those that are redoing their business models today. So there are a series of public companies today that have to redo their business models at some level, some to a dramatic level, some to a smaller level, as they have to now change their focus from driving student counts to driving outcomes. And for some companies, I think that's going to be a very large change in terms of the way they operate, because that is, it sounds small, but if you have to start sort of judging yourself by outcomes rather than by how effective your marketing engine is, that is a cultural shift in a series of organizations that's pretty substantial for a part of the market. There are others on the other side who've always run that way. I'll use a very quick example, but we have a law school business as an example that's a terrific business, and it's always been focused on outcomes. And it generates terrific margins, growth rates that are 40% growth rates, and it sustains its way through it. And today, we don't have to change anything in our business. And why is that? It's because today, for the students that we accept, last year, 94% of them got jobs, because we're in the top 3 bar passage within the states that we're in, and we've built a better mousetrap in terms of being able to serve a population of students who really want those outcomes. So I think the market's going to bifurcate, and then you'll see people start to come back up as they build quality programs. The last thing I'd say is nothing changes in the underlying opportunity of post-secondary. So when you look at the need side, the demand side, when you look in the United States, if you can grow a business incredibly fast if you produce good outcomes. And so I'm very bullish on the category when it's clear to the market who the winners and losers are.
So with the rules now in place and fully appreciating that we don't know exactly what it will mean to all, and there's clearly data that has yet to be released that lets us know, right, where the different companies stand, public and private. Are we at a point where at least the rules are known? Does that mean that we will see more investment in post-secondary? My sense was over the course of the last year in the period of uncertainty that money may have been sitting on the sidelines, waiting at least to understand what the framework was going to be. Now that the framework is known, and I appreciate we don't have great data yet, perhaps to make those decisions on the value proposition and on some of the outcomes that you mentioned, Chris. But will we see transaction activity pick up? And if I can ask a related question, sometimes in transition periods, companies are actually better off being private rather than public in the period that they're undergoing a transition. Of course, assuming they're a business that can be transitioned, right? We're starting with some good raw material. And maybe Rob and Jean, at least on the area of the transition public-private markets, it would be interesting to hear your thoughts on whether or not we may see companies actually going private or getting taken out now that we know we have some roadmap.
Well, let me go back first on the regulation piece, because we're talking a little bit gainful employment. It's a regulated industry throughout the world. Regulations come, regulations go. They actually rarely go, but they can mutate. Most regulatory regimes have a process by which the industry and constituents outside of the industry can put input. I think in the United States you saw, which was frankly a bit of a failure on the part of the for-profit industry, to influence regulation years and years in advance, right? Politicians weren't in the schools. You run an allied health school and the politician in your district hasn't been in it, that's crazy, right? Go to an allied health school. You will understand at that point in time how people are transforming lives, and then it's more difficult to come down on the bad side of you. So you've got to be involved in the process from the get-go. Now, what happened is when the first cut of gainful employment came out, one, it appeared draconian here in the US, but secondly, there was enormous uncertainty around it. And so it's very difficult for private equity investment to put money in at that point in time. A lot of investment, it was being done by hedge funds in the public equity markets on the long and short side. Right? But it was hard to do transactions in this space. Now that there's a little more certainty, I can't imagine you don't see transaction activity. This industry has a long history of fantastic publicly listed companies, global companies going private, over and over, and then often coming back public again. There's no reason to expect that wouldn't start back up.
The way to think about it, it's a big, big market with very low market cap. And if you think about the upside potential in that equation, it strikes me there will be investment capital by private equity sponsors, hedge funds, or collections of hedge funds who will say it's far better during this transition for us to own the equity and wait until the public markets see a growth opportunity. Public market investors are fairly narrow in their focus, and especially with relatively new companies, they have to see apparent growth opportunity. And anything that's confusing or gets in the way, like uncertainty in the regulatory landscape, is going to make it difficult for these companies to do well in the public market. But given that that is the sort of near to medium term horizon, and you don't have an opportunity for big changes in valuation in the near to medium term, I think the transition of a number of these public companies to private ownership is highly likely.
Do you expect that we will see more of these transactions, I'll use the term strategic, schools buying other schools, or financial transactions, private equity, venture capital, and other money like that coming in to invest in the space? Do you have a view, Chris?
Well, I think you're going to see both at some level. I mean, schools buying schools for sure, because there's opportunity for consolidation and best practice sharing, a variety of things. And I just, as both of these guys were saying, I think there's a lot of money that sat on the sidelines while there was a great deal of uncertainty. And we see it happening already. The debt markets have already, even though it's early, we're already seeing where literally you couldn't get a turn of debt on a company 6 months ago. Overnight, things are shifting. And I would tell you, as more data comes out, you'll see more and more traditional lenders. And traditional lenders are sort of a leading edge part of the equation, whether you take privates or other things of that nature. So we're seeing all of the evidence to suggest that, that this is an area that you'll see pretty substantial investments taking place.
Well, look, we've got a structural unemployment problem in this country, which is now, I think people understand this is a bigger issue than simply a matter of how fast we're going to have a recovery.
Right.
And so the concept of retraining the population is actually a huge national challenge. And so the natural opportunity for this sort of process to gather some steam is quite high. I think there will be a lot of private investors who will want to take that argument and develop it. And the fact is, you now have actually vehicles for delivering the services which are priced very well. Even if they need to be transitioned to a somewhat different business model, that is real currency and has real powerful opportunity for investors.
Jean, you're in the market every day. Chris commented about sort of a willingness to lend kind of coming back to the market. Can you talk a little bit about what you see and a willingness to fund these types of transactions?
Well, I think the credit markets have been pretty strong, which is really a function of the Fed keeping interest rates low and investors looking for yield. With the economy looking very uncertain, I think the credit markets have begun to slow a bit. And so we're seeing a tapering of that. But I think fundamentally, for the right sort of opportunity, the credit markets are there. They may not be there at the kind of multiples that we saw 3 or 4 or 5 months ago, but they're going to be there for companies that have cash flow. And so I think it's plausible to imagine finding credit from a variety of sources in the public markets or the private bond markets that will make it, you'll be able to get deals done and finance them. So I think it's likely to make that able to work.
To have a market, we need a willing buyer and a willing seller. And we've talked a little bit about the interest in investing in education. And without tainting anyone here with information that you may know, can you talk about whether or not we have willing sellers in the market? I mean, will we actually see transactions consummated?
I think that what we always see is at the
Or is the valuation gap at this point? Where's that perception gap today?
Nothing's sure until they get it done. But what I'd
course.
say is that at the beginning of every recession, you always see all the private sellers are always looking backwards in the rearview mirror on why they shouldn't be getting the multiples they got a year ago, 6 months ago, whatever. We're actually sort of coming out slowly the other side. I think actually we're in a really good time when there's been a seasoning of expectations in the marketplace. And I think that's a good recipe, where the expectation sets are more realistic today in terms of it, and an understanding that a lot of businesses have to be worked on. So when you look at those things, that suggests that there's opportunity out there, and we certainly see that out there.
Rob, are you saying the same?
Well, first of all, internationally, transactions have been happening all over
Clearly.
the place. So
Clearly.
here in the U.S., are there going to be willing sellers? Yes, I think people's expectations have to be realigned. A lot of the folks who own a post-secondary institution right now are bemoaning the fact that they won't get 11 or 12 times multiple, right? Well, you're not, right? That's probably just the reality of life. But don't forget that your EBITDA over the last 2 years has literally exploded on the back of a recession. And so, even though you might be experiencing flat or negative comps right now relative to last year, don't forget last year was an all-time record bonanza year. Versus 2-3 years ago, you're still on a pretty nice growth trajectory. So, the cash flow has come up with it. Most of them are held in funds. They've been in the fund for some time. There is a natural desire to move it on to the next ownership. So I can't imagine that you don't start seeing companies come back to market, likely in the fall.
Okay. And Jean, I know you spend more of your time on the technology side. Can you give us some sense for whether or not you see more activity coming in the education side of the market?
I think we'll see more activity because there's more opportunity out there. There isn't that much that's really public in this sector in technology, but the technology companies are looking for areas of growth, and technology investors are always looking. So I think you'll continue to see activity. Plus, it's hard to predict where the next technology innovation in education is going to get to the point where it becomes an opportunity for real public ownership. It's very evident from all the excitement we've seen about social media and companies that have to do with internet-based technologies in the public markets over the past 6 months that there is maybe a barbell-type market. Many things either can't go public or are sort of receiving very tepid receptions in the public markets. And we've seen deals struggle to get done in IPOs and so forth, sometimes for big companies. But with companies that you would have to say have the characteristic of very high growth in what appear to be big markets, the market has been very, very supportive. I think that is a sign that you've got public market investors who are looking for signs of growth and a market which I think is episodic. You're simply going to have to pick your spots.
Makes sense. In terms of the types of investment vehicles, we've sort of talked private and public. We've talked a little bit of nonprofit and for-profit. And there seemed to have been some discussion yesterday, and I know, Chris, Rob, we've spoken a little bit about sort of public-private partnerships. Do you expect to do more of that type of investing? Will we see more of that nexus between nonprofit and for-profit, the opportunity to cooperate and perhaps over time monetize that investment?
Well, I think traditional institutions in the U.S. have already been experimenting with this for a generation. But what I do think is happening is that the traditional institutions are facing a dramatic set of problems in their core businesses. Their ability to be able to pass along price increases the way they've had for the last 30 years, the performance of their endowments, the fact that their costs have risen basically at the same rate as their tuition, pressures for research institutions on the forward look of research dollars from federal and other sources. When you look at it, you could make a strong argument that traditional institutions today face very uncertain times in their core business model as they go forward. And they're going to have to change, and they're not really great at changing. And against that backdrop, I think that what you will see is opportunities to partner with institutions to solve for their problems. And there are, and I having been involved with a number of them over the years, I can tell you it is now on the agenda item for institutions to say, gee, if we cannot really imagine the world, which by the end of this decade, the average private tuition in the United States for college will be about $100,000 a year. And if you look at the percentage of kids who are getting financial aid and so on, it's gone from a market which has been partially financial aid driven to dramatically financial aid driven. So you look at all of the sort of forward look demographically, financially in this market, you're looking at a recipe for basically a lot of commotion in post-secondary in general, which is a great opportunity to be able to build, support, partner, and do other things to solve for their problems.
Rob, when you think about public-private partnerships and when you talk to your clients, when you're investing in this type of a business, how do you think about monetizing your investment when you're investing alongside a nonprofit institution?
So first, I'll agree with Chris again that for-profit, nonprofit and public institutions, post-secondary institutions in the U.S. really are about to have to face one of two choices, right? It was mentioned yesterday, running a teaching institution inside of a research institution, it's two different institutions, and the research institution is bleeding them dry.
Yep.
And the funding for that's about to dry up. So you have a choice. You can either shed that and become what we would label a capital-efficient university. You can run a very sustainable nonprofit university on the back of tuition. Make no mistake about it. But you can't do that while researching on the side, right? You have to change the nature. So you either have to change the nature or you have to look for significant alternative sources of funding. I would say cost reduction, but universities are notoriously bad at actually pulling the trigger on cost reduction. So let's say necessary but insufficient. So then you say, how am I going to generate substantial amounts of revenue? And that's where the private sector can step in with really credible value propositions that are aligned with an institution's mission, right? And each one of those would be different. Maybe you want to run a pathway program, right? Bring international students, work on English language training, articulate them into your school. That may be very mission fulfilling for you. It might not. Maybe you want to take some of your degrees and go online with them, right? Again, that can be very mission fulfilling. And there's institutions, BISCs and IMBANETs and tutors and Deltacs that will come in and help you do that, right? And you can form a very clear. Now, if I'm on the private side of it, what I want is I want to have an enduring, legitimate partnership. I would love to engage you in a discussion about a 20, 30, 40-year commitment. Usually can't get that done. So let's write a 5-year commitment and put real meat on the back end of what is the performance guarantee from my side and your side in a partnership. And we're making a contract that looks a lot like a JV. right? But it's got to be a lot of give and take along the way. There'll be bumps in the road.
When you invest along those lines, and on the private equity side, you usually think about at some point exiting your investment, or at least monetizing it. How do you do that in a public-private setting?
So if I've got a separate institution doing it, I can just monetize right out of there.
Okay.
It's tougher when I'm one-on-one.
When you're one-on-one. Okay, that makes sense.
But I think it's no different today. I mean, on a much more mundane basis, people who are providing software systems to institutions that are running their back office are doing it all the time. So what you're really looking at is a deeper set of partnership frameworks that, to your point, either through a diversity of them or through appropriate relationships, the ability to point investors in the sustainability of that relationship and the advantages you have in the marketplace as a result, I don't think you'll have a problem, frankly, finding the next person to want to invest in those.
Okay. Tao, on the cross-border investing front, a lot of the investing we've seen has often been in market. You've talked about China, your investments are principally in China. It's not that we don't have US companies like Laureate and others who've invested abroad in meaningful ways, but I wouldn't say it's been a cross-border, there hasn't been a ton of cross-border activity per se. Do you think that is going to change? Will we see more of that where companies operate across multiple borders?
Yes, obviously, because we do have a Laureate pretty active in China.
Yes.
Apollo has been setting up office in China for 8 years, 10 years, although they haven't done any acquisitions so far. But I think we will see more and more international players coming to the China market. At the same time, I think Chinese players are also looking at opportunities outside China. I also help the company looking at opportunities in Southeast Asia and India. So potentially, I think we will see more cross-border opportunities.
Okay, terrific. I'd like to open it to questions and answers from the audience, please, if there are any questions. Yes, in the back.
Thank you. My name is Jason Bird. There's been a lot of great discussion about kind of post-secondary as it relates to valuation over the last hour or whatever. But if I recall, there was a graph yesterday that talked about the return on investment, all dollars that go in early, kind of pre-K, and then through early elementary and beyond. From an investment perspective, I haven't heard a lot about valuation of that space. Do you have any kind of insights as it relates to that, or I just open to your perspective?
Sure. I mean, I can take a stab at some of those. K-12 is a bigger sector than post-secondary. So it's less well developed in the sense it's more institutionally bound. However, it's a great area, and there's been a share shift in the market. And I think going to something Rob said earlier, we tend to look down at point of service delivery rather than curriculum and sort of second derivative kinds of products. So when we look at those areas, I think there are tremendous opportunities in the market. So if you think today, about 1 out of 6 students has elected to leave the traditional public school system and use alternatives, whether it's a charter school, whether it's homeschooling, whether it's private schools, a variety of things. That segment of the market, the shift away from traditional schools, is growing at multiples of what population growth looks like. And so what we're seeing is a fragmentation over time of the market to different delivery alternatives. We see people, and this really is ultimately driven by the need for that the value of education as expressed, let's say at the post-secondary level, the best universities, the best things, ultimately have to be fed by the best students in K-12. So we're seeing parental willingness to invest in all up and down the chain to be able to give their kids an edge in a highly competitive market for post-secondary. So I think there's actually lots of opportunities actually along those lines. We have businesses that provide virtual charter schools, unbelievably good businesses doing that, businesses that provide private schools and redoing the models for what a prep school is about. So I think this is an area that is as vibrant. And the last thing I just note is, I think the challenge there is there are a number of traditional businesses in that market which are tied to public reimbursement dollars. And that's where you have a little more challenge because you have cyclical against state budgets and federal budgets. that creates kind of an overhang in sectors of the market. But there are other sectors which run, frankly, independent and are non-correlated to that.
I have a comment on this too, and this is spoken from the perspective of being a California parent with 4 kids in an independent school in California. There's an awful lot of room between the public school system and the price of the independent schools, a huge amount of room. And what's interesting is the independent schools aren't growing that much. I mean, they are expensive. They're dealing with all sorts of issues in terms of how to manage the tuition increases, which for a number of years they were getting away with twice the rate of inflation, and that just can't happen anymore. And they have, in effect, priced themselves out of the market, even at the high end. But you think about the room between public school, free to the public education, and very high-priced independent school education, and the desire, as you say, for parents to do everything they can to give their kids advantages in getting to the post-secondary education environment. And it strikes me there has to be a huge amount of opportunity, whether it's in supplemental education or in alternative education. And so I think that we're at a point where you can just imagine how much potential there is for development in that area.
Go ahead, sir.
I think another interesting trend in China, K-12, is this booming of bilingual kindergarten, bilingual primary school, bilingual schools. As I said, the overseas education studying abroad has become really a phenomenon in China. In the past, I think students will only go for master degree or PhD with scholarship. So they need to score very high in GRE, in TOEFL. That's how I think New Oriental has been benefiting from this, preparing people for the test. But now I think it's becoming no longer a question of whether they should go. It's now when their kids should go for overseas study. But then you need to prepare them for the overseas education. Then that's why we see the bilingual kindergarten, bilingual K-12 schools.
Any other questions? On a closing mark, I'm going to ask each of you to tell me which country outside the US do you think the most impressive investment opportunity exists today? Just pick one.
Pick one.
You can like more than one, but just pick one.
I think Mauritius is unbelievable.
Because you'd like to visit the investment?
You know what? I'll go counter and I'll do regional. I actually think Latin America is a great area as a general area. So
I'm going to say Malaysia. Rapidly rising income and a unique place where you can tap into Chinese student demand and Indian student demand without all of the regulatory issues you run into in those 2 countries.
Tao?
Well, for me, it's easy. Always China.
I had a feeling that's what you were going to say.
Yeah, but I guess people may have a lot of a question about the regulation, the difficulty investing in China. I think this is China. At the appearance, everything looks impossible, right? The regulation, the quota, the tuition control. But if you're really in the country, you understand all these tricks, then everything's possible. This is China.
I'd reinforce that. I've been to China recently, within the past couple of weeks, and spent quite a bit of time. And our own experience in China is that from 30,000 feet, it looks very, very difficult, and it's incredibly intimidating. And then if you spend time and really dig in, you find there are all sorts of ways to unlock the puzzle.
Exactly.
But it requires a lot of time and determination and flexibility. And the other thing is, it's easy to say China, but China itself is 50 markets that are enormous markets. And while I think Malaysia is a great country, I was in Malaysia myself 3 weeks ago as well. China has 40 Malaysias or something. It's remarkable. And if you think a little bit beyond the level of China, into the level of specific markets. And they're markets that we don't think about here, cities that most people in the West haven't even focused on. Mm-hmm. They are big enough and dynamic enough, and the need is great enough. There are opportunities even in places like that.
Terrific. Well, thank you for everyone in the audience. Thank you, panelists. And you were great.